Welcome to the Daily Update, Improv Edition, where I'll go over the action in the market for Wednesday, August 23rd, and then we'll see how things are looking for Thursday, August 24th. You can notice that I do have a laser pointer here. I finally realized that Google Slides does come with a laser pointer, so hopefully this will make it a little easier to see things as I point them out. We had a pretty significant update. We're showing a lot of improvement technically. We're still negative. We could still fall back from here. But NVIDIA, they were trading ahead of this before they released their earnings. Their earnings came out, and right before I started recording, I checked the futures. They're up about 0.75%, but this is still many hours before the market opens. And we have to be careful about this buy the rumor, sell the news. And that's kind of what's been happening lately. And folks want to lock in some shorter term profits, and so they're happy with what they've been able to achieve in this particular position, and so then they get out. So just be aware of that if you're actually into NVIDIA and doing any actionable positions with them. But we are making a better case for this scenario that a base was forming, a bottom, and that we're starting to come up, and we're still seeing follow through improvement. First of all, I have set some dates up for the class. The long 3-hour class will be Monday, September 4th. That is Labor Day. So let me know if that's a problem for you. And then the next week, I'll do Monday through Wednesday from 12 to 1 p.m. Eastern time, where we break the class up, where I go through some basics of my philosophy with technical analysis, some strategies, as well as support and resistance. The idea is to stream this on YouTube and Rumble at the same time. If something doesn't work, I'll be using Zoom as a backup. Also, I will be recording this, so if you're not able to attend, you'll be able to watch that later. Or if you do attend, you can rewatch that at some point. Let's go back and talk about what happened. Right at the open, we had a gap higher open above the daily pivot. The daily pivot's been really pivotal, over the last week and a half or so, where we got above 43.96. We went up to R1 at 44.10. Then prices continued to go up. We got above R2 at 44.32. Then when we started to come back down, R2 acted as support during that time, and we closed slightly above R2. We were up 1.1% on below average volume. That still hasn't changed since we're dealing with the summer months. The technicals were still leaning more negative, but showing a lot of improvement, and I have a lot of charts to show you that. It's about inflation, interest rates, growth concerns, but the short-term story is probably NVIDIA and what will end up happening with that stock. Some comments. We did close above 4,400. We had been all the way up to 4,500. We started to deal with 4,300, and now we're getting back above 4,400. The mega caps were strong ahead of NVIDIA's earnings, so we saw some front running going into that. That's why we want to be careful about the sell the news part, and it's still up in after hours. Growth did outperform value in this current scenario that's kind of going in the background. This is more of a pessimistic scenario that we've been dealing with. If we do start to see a shift, is the market going to develop a more positive scenario to replace the one that we're dealing with right now, that the economy is stronger than expected and that the Fed will keep rates higher for longer, which we've known for quite a while? The variable in that is, are rates going to need to be increased at the next Fed meeting or sometime between now and the end of the year? There's also some concern about the Chinese economy because they've been coming out with weaker than expected economic reports, and they're actually lowering interest rates. We only have the stochastics, and it's the longer term stochastics that is still extreme negative, but we're seeing a lot of improvement in the short term. We just have the PMO studies in the intermediate term that are extreme negative, which we're suggesting that we're oversold. So we're seeing a lot of improvement this way. The dollar was up. That didn't have much of an impact. It was interest rates being down really gave some support to stocks. All of the yield curves that we follow are still inverted. Sentiment is still neutral. We're ticking up where we had been at 46. We ended up getting up to 49. And our trend, it's negative still. The ADX is still below its moving average as the market is jockeying around. So that suggests that yes, we're above 20. Yes, we're in a trend, but it's a weakening trend. The red line, even though it's coming down, is still on top. Our bias is positive because of the up day, and our momentum, I've switched to mixed to positive just because we're showing improvement yet, but we're still having kind of a negative backdrop right now. The economic reports that came out, and I think I have one or two charts to show you here. The weekly MBA mortgage applications index was down 4.2%. Last week it was down 0.8%. The S&P Global Manufacturing PMI, the preliminary report, came in weaker than expected at 47. The services PMI came in weaker than expected at 51. Now, for both of these, when we're below 50, that means contraction. When we're above 50, that means expansion. New home sales, which I do have some charts to show you of this, they were at 714,000, more than the 701,000 they had expected, and up from the 648,000 that we saw last time. Here is the chart of new home sales where we were really starting to go lower. And notice I have the laser pointer here now. And we're seeing some improvement in this chart after we had been going quite a bit lower. Then looking at the median prices, they are really dropping. As interest rates are going up, people are having to lower the prices for their houses so people can afford to get mortgages. And so we are seeing a drop off in that. Here's another chart showing the new single family homes. And what I do is I follow this along the bottom just to see how are the rise or decline of homes, how is that correlating to the S&P? And they're not really correlating all that strong right now. Earlier on, through the late teens and into the early 20s, we did see a really strong correlation, but right now we're not seeing that. Also, I brought this chart up yesterday. This is an average of the VIX from 1990 up to 2022. That's the blue line. And then the red line is what the VIX has been doing now. We're wondering if it's going to follow a similar path here. As I stated before, I don't use this to make decisions. It's just kind of interesting and something to watch. I did pick up just a couple of charts from isabelnet.com where we're looking at value versus growth. We're getting quite low when we look at the small caps. And this could suggest that they're undervalued. And so they're getting down to an extreme negative reading, which sometimes could really suggest that maybe we're going to see a bit of a bounce out of this. Then looking at the earnings revisions breadth, we're seeing an increase as earnings projections going out are starting to improve, which is justifying higher stock prices. Then we're looking at institutional buying and then comparing it with retail selling, where the institutions, they've been buying as we've been going down lately, where a lot of the retail folks, that's you and me, we're the individuals that buy and sell. We've been getting out of the market where the smarter money or the big money has been coming in and doing some buying. Here's the intraday chart where we did gap up to the daily pivot. It's just amazing to me how last week it was resistance. So far this week it's been support. We were able to get above R1 and then eventually climb up to R2. We went above R2, came down, which now acted as support, and then we closed a bit up above R2 in Wednesday's session. Here's the intraday chart. Haven't shown this in a few days. We were seeing the futures really trailing off in the initial overnight session or the pre-market session. And then we were still positive though. And then we saw most of the buying taking place during the time when the market was open. So that didn't produce a huge gap. We did gap up a little bit, but not as strong as the futures had been. And then we just carried out the strength throughout the day. Right after the close is when NVIDIA reported, and we're seeing a real spike up in the initial futures, at least leading up to the initial overnight session. Here's the growth versus value chart showing how the blue line is going above the red line. When we were coming down, the red line was above the blue line. Now that we're seeing some improvement, the blue line is above the red line, even though these two indexes are on different scales. Also, the growth to value ratio. did spike up right out of the gate and then maintained most of those gains as we went throughout the session, also suggesting that there's some growth buying going on by the smart money. Looking at the VIX, it ticked down with the line chart and the bar chart because we had an up day. The VIX, which measures volatility of the VIX, continues to decline as we've been going up. This is also encouraging. Our 5-period simple moving average of the equity put call ratio is continuing to decline. When we came up, that was negative, and now that we potentially have spiked and are coming down, that could give some really good support to the market. And here's a longer term look at that same chart where we got above this extreme level, and we're wondering, are we going to continue to fall, and will that give continued support to the market? The VIX to VVIX ratio, it's still having a tendency to turn back up. Longer term, it has been declining. It's going to take a while for this to shift, just like the next chart, which is the 253-period moving average. We are continuing to go back up, and it'll take some time for this to reverse and go back down if we are really seeing a shift to a more positive climate. We're seeing a bit of a bounce here with the ratio between the risk on and risk off measurement that we use, where longer or more intermediate term, we've been going up. We've been seeing some shorter term weakness, but now we bounced up in Wednesday's session. Here's a look at our trend. The ADX is still below the moving average and declining, but it's still above 20. The red line is declining, but it's still on top. So we're kind of getting in that in-between land where if we are going to switch over and go more positive, it's going to take a few days for this indicator to adjust. In the short term, we were starting to come back above 20, but now we're rolling over because this ADX was picking up the red line, which is declining, which is making the ADX itself actually decline below 20. Here's the daily chart where I pointed this out yesterday, where we came down right to this previous low, which also was a previous high, and this would technically be a really good place to stage a rebound. We've been coming back up, and now we're wondering, can we get above this pivot? Can we get above the 50-period moving average? On the bottom, we still see where volume is below average. Here's our trend line study. Haven't shown this in a while because we broke below this intermediate term trend. We're coming back up, and if we see more positive price action, is this going to present some kind of overhead resistance? That may slow things down a bit. Or if we can get through this and then close above this, that would turn things even more positive. Here's the stochastics. We're in the short term. We're showing some improvement, no longer extreme. We're turning back up in the intermediate term. We're just barely ticking up in the long term. We're still negative here. We're still extreme. But if we see more follow through price action to the upside, this will also improve. Our standard deviations, we had come down to the third standard deviation level. That suggested that we were oversold. And then we jockeyed around between the 2 and the 1 position. Well, now we're coming right back up to the midpoint. We're just a little bit below that. So we're showing improvement, but we have not switched positive yet. When you look at all these crazy purple waves here, they're continuing to go down. If we start to go back up, we'll want to see these waves start to turn up as well. Accumulation distribution showing some improvement, but still underneath a declining moving average. That's why we're not full-blown positive yet. But the Elders impulse system for the S&P, it has switched back to a green bar after it had been neutral. That is turning positive. The Swenlin trading oscillator, we saw a little bit of a hint of this yesterday where we were turning up based on price and volume. We continue to do that, even though we're still below zero. The parabolic SAR, which gave us a dot after Tuesday's session, continues to be showing that it's turning back positive after Wednesday's session. The slope, still negative, but starting to turn up. It's also extreme negative. And then looking at our moving averages, we never came down all the way to the 100-period moving average. We were able to get back above the 50 exponential moving average. We still have the 50-period simple moving average, and now these 20-period moving averages are coming down. So some of these moving averages could provide some overhead resistance. The McClellan oscillator for the S&P is showing some improvement. It's still below zero, but it's climbing up after being extreme negative. The chicken money flow, the red line, the moving average, is continuing to show some improvement. We're still negative here, but showing improvement. The PMO study, we are no longer extreme negative with the PMOs that are rising. We're still extreme negative with the buy signals, and we continue to decline with the PMOs that are above zero. We're still dealing with the Ichimoku cloud right now, or the itchy and scratchy cloud, where we potentially could be finding some support in here, which is lining up with other support that we've been seeing and likely seeing an improvement. The MACD, this is still looking more negative. The reason why this hasn't really turned up yet is this is a weekly chart, and the last close that we had for Friday, we were coming right down below the moving average. So even though this changes every day on the weekly chart, we're going to have to see some really positive price action to turn this back more positive. Looking at growth versus value, it did turn down just a little bit. We're wondering, okay, did we come up to this previous high and now we're starting to turn down because value had a pretty good day, even though growth had a better day. We're also keeping an eye on Dow theory, where we broke out with the Dow, came back down to this previous breakout level, and now we're starting to bounce back up. This could be providing support. We're also seeing that same thing with the transports. The utilities are still under a lot of downward pressure right now, but they ticked up slightly on Wednesday. Looking at the transports to S&P 500 ratio, we're not seeing this improve yet. In a good, solid environment, we want to see this line going up. It's continuing to go down as the Dow has been outperforming the transports. But the Dow still is maintaining this S1 support level. However, it's still below its 50-period moving average. The NASDAQ 100, the PPO, is starting to turn back up, but it has not crossed over positive yet. The NASDAQ 100 did have a good day, but it closed right about at S1, just a little bit above it, but we're coming back up to the 50-period moving average, and we also have overhead resistance at this previous high. So we're going to have a lot of strength to really break through this. We did see where the mega caps outperformed the small caps, so I'm sorry, not the small caps, but the rest of the market. And so that's why this ratio really ticked up. That just shows that the big boys are outperforming the smaller stocks. Looking at the NASDAQ, also coming up to potential overhead resistance. We have this S1 level, we have the 50-period moving average. We're going to need to see a lot of strength and then close above this for things to turn even more positive. We did come down to the 61.8. Actually, this is the 50% retracement level, and we're bouncing up off of that. If we continue to go up, we have the 61.8% retracement level for the NASDAQ as overhead resistance. The FANG index also showing some improvement, but still below its 50-period moving average. Small caps were able to get back above their 200-day moving average. That's more positive. Looking at the Russell 2000 small caps, we're showing some improvement with the RSI. The MACD is still showing that we're going down, but we came down to the 200-day moving average and thus far have been able to bounce up off of that. Yields really came down in Wednesday's session, and that gave good support to stocks. Looking at the price of bonds, they're still negative. We're turning back up slightly with the MACD, but we're not crossing over yet. We've had a recent death cross with the price of bonds, but we are seeing some improvement. The RSI is showing some improvement, but is still below 50. Looking at the ratio between risky and conservative bonds, this is continuing to go up, meaning that folks have more confidence in the economy. We may not be understanding what's going to happen with interest rates, but these folks tend to think that the economy is looking more positive, looking out into the future. Looking at our PPO study on the weekly chart, we're still seeing a slight decline in the long term, intermediate term. We're trying to cross back above zero in the short term. Our longer term weekly chart of the S&P, we're still below this resistance level. So if we break through the resistance that we're already dealing with, then we're going to have this above where we're at right now to also deal with. NASDAQ 100 also will have this overhead resistance to deal with if prices continue to go up. Then I haven't shown this in a while. This is the Staples to S&P 500 ratio, where it's been in a longer term decline. That was giving good support to the S&P. It's now starting to decline again. Will that give more follow-through support to the S&P? And then looking at Tom Bowley's research, where we're kind of seeing a little bit of a shift now, where tech tends to be hot in August. Well, it's looking better. And energy was really down in Wednesday's session, where it had been doing quite well. But we're also coming into the latter part of August, where we often see some historical weakness. We are seeing more follow through to a degree with growth outperforming value, which often happens from May to August. So, what's our outlook for Thursday? We will get NVIDIA. The market will have a chance to react to that. There are other earnings reports coming out, even though earnings season is slowing down. The markets are really anticipating what Chair Powell is going to say on Friday. The technicals are negative, but improving, and then we're still working with this scenario that is a bottom forming. Right now, we can say yes, but we need to see more follow through action. We will be getting the weekly jobless claims and durable goods orders in Thursday's session. We're keeping an eye on the geopolitical events, but it's about inflation, interest rates, NVIDIA, and what Chair Powell is going to say. Here's the updated economic calendar showing what's coming out on Thursday. The big speech will come on Friday. The Stock Traders Almanac statistics were neutral to positive across the board with the Dow, S&P, and NASDAQ. We're also in the week after options expiration. We're up 66.7% of the time and down 33.33% of the time. Where maybe we're finally starting to see this bounce that happens often during a pre-election cycle. It didn't come when it usually came. Maybe it's just being delayed and it is coming about later on. But we have some significant overhead resistance to deal with. Also for the NASDAQ, have we bottomed now? Are we going to see some improvement going forward? Looking at the S&P, also with the green line, we're seeing some improvement in reality now. We've also tended to see some improvement based on historical patterns. We will be on the 18th trading day of the month, and here's the other chart showing that we're out of that positive time that historically has happened. Maybe we'll see some more positive action going forward from here. So our scenarios, we still kind of have to lean towards the down one, even though we are shifting more positive. The technicals are improving. We're still wondering, has this bottom actually formed? We can't really go with the up one yet because we are still negative overall when we look at all of our charts. We could go in the short term with the sideways trend because both of our ADXs are showing a weakening trend. The short-term trend is still below 20. The warning signs. We're wondering about this convergence of these short-term bearish signals. Are they finished now? We have some resistance to deal with above where we're at, and we're still negative looking at our charts. But is this scenario going to come back in and take prices down lower? The longer-term trend signals were still below those levels for the S&P and for the NASDAQ 100. August tends to be weak, but we're past the historically positive time. We're just wondering, are we coming into that now? The oscillators for the S&P, they're still negative as well as the NASDAQ 100, but we are seeing some improvement. The VIX has been climbing, but now it's starting to decline, especially longer term. That could be positive. The equity put call ratio is starting to decline. That could also be positive. And I finally changed this. All of the other indexes that we follow are still under their 50-period moving averages, which may act as overhead resistance. The cumulative new highs, new lows, going to take a long time for those things to start to show improvement. We were unchanged on the 3-month yield, but we're still above where we were at back in 2007. What we're really watching for is that to drop and drop in a significant way, meaning that the market is anticipating economic weakness. Well, what's causing that weakness? Is it going to be another banking crisis that comes about? S&P 500 growth is breaking out, even though it came down just a little bit on a ratio basis on Wednesday. Earnings season is positive, and right now all the talk is about NVIDIA. The positive signs, we still have seasonality and setups that are in the background. The daily special K chart is positive. The weekly chart is still negative. The longer-term equity put call ratio, it's positive where it's been declining, but it hasn't rolled over at least yet. The S&P is still above the downtrend channel upper line. The risk on posture is still there. It showed a bit of improvement on Wednesday, but in the shorter term, we're continuing to decline. The S&P is outperforming utilities, and the Staples S&P 500 ratio is declining. Both of these often give good support to the S&P. The Russell, the small caps, and the mid caps are working off of recent golden crosses. Small and mid cap growth continues to be positive. The financial sector also generated a recent golden cross, even though they've seen some shorter term weakness. The parabolic SAR chart, now we've seen 2 days where that has turned back positive. And then we're wondering about this convergence of these bottom signals. Are they coming together? Are we going to still see more of a significant bounce from where we're at? So our conclusion, we're still negative, but improving. Are we forming a bottom? In the short term, we're negative, but improving, as well as the intermediate term, and we're still positive in the long term. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.